Okay, so let's get right into it. We're looking at a company that is, to put it mildly, living a paradox. You see, Plug Power just recently hit this incredible milestone, something they've been chasing for years. But at the exact same time, they're basically staring down the barrel of a financial gun. It's this wild story of a huge breakthrough and a massive crisis happening all at once. And this slide really lays out the two realities. On the one hand, Plug Power finally cracked the code on how to actually make money on its products. But on the other hand, it's burning through cash so fast that it might not even be around to see the benefits. So the big question is, how can both of these things possibly be true? Well, let's break it down, and we'll start with the good news. All right, so this is where the incredible turnaround part of the story begins. For years, the big knock on Plug was that it was just a growth at all costs company, that it can never actually turn a profit. And then they rolled out this radical new plan. They gave it a pretty cool name, Project Quantum Leap. And look, this wasn't just about some minor budget cuts here and there. No, this was a complete top-to-bottom overhaul of the entire business. It was a strategic pivot, a huge one, away from just chasing revenue to actually demanding profitability from their operations. And if you want proof that it worked, just look at this chart. The numbers are staggering. In the fourth quarter of 2024, their gross margin was negative 122.5%. That means for every dollar of product they sold, they were losing another $1.22. That's a total disaster. But fast forward just 1 year, bam, a positive 2.4% gross margin. This is the proof in the pudding right here. So how in the world did they pull off a reversal like that? Well, it was basically a four-pronged attack. First, they went back and renegotiated all these old money-losing contracts. Second, they finally started charging what their products were actually worth. Third, they made some tough but necessary cuts to streamline their workforce. And finally, and this is a big one, they managed to slash their service costs in half. A huge part of that was because they started making their own hydrogen instead of having to buy it on the crazy volatile open market. And, leading this whole charge is a new CEO, Jose Luis Crespo. And you gotta love this. Right before he officially took the top job, he went out and bought over 37,000 shares of the company with his own money on the open market. This wasn't just some corporate talking point. The guy in charge put his own skin in the game, betting that this turnaround was the real deal. But, and this is a massive but, just as they got the engine running perfectly, it looks like the fuel tank sprang a giant leak. Because despite all this amazing operational success, an existential crisis was brewing right under the surface. Okay, here's the first number that'll make your jaw drop. In 2025 alone, Plug Power burned through more than $500 million just to keep the lights on and run its daily operations. Now, management will point out correctly that this is actually an improvement from the year before. But let's be real, the number itself is it's completely unsustainable. And this next slide is exactly why. When you're burning through $535 million a year, but you only have $368 million left in the bank, well, the math gets pretty simple and pretty scary. Without a huge injection of cash, that clock is ticking, and it is ticking really, really fast. Now, this was supposed to be the company's lifeline. Plug's entire long-term plan was built around this massive $1.66 billion loan guarantee from the U.S. Department of Energy. It was the cavalry coming over the hill. But then, the whole program got suspended. The funding that Plug was banking on to build its future just vanished. And just when you thought it couldn't get worse, a second blow landed. New Treasury regulations for clean energy tax credits came out with this little rule called hourly matching. Now, to put it simply, it means you can only get the tax credit for the hours your hydrogen plant is running on verified clean energy. That makes it totally impossible to run your plant 24/7 using power from the grid, which basically torpedoes the entire financial model for building new large-scale hydrogen projects here in the US. So there you have it. You have this incredible operational success story that's being completely crushed by a financial and regulatory nightmare. To figure out what this all means, let's zoom out a bit and put Plug Power in context with some of its biggest competitors. When you look at the whole fuel cell sector here, you can see that Plug's positive gross margin really is a solid achievement, especially when you compare it to peers like Ballard and FuelCell, who are still struggling. But then your eyes drift over to Bloom Energy with its stellar 31.9% margin. And you realize this isn't just a small difference in numbers, it's a huge difference in strategy. And this slide, wow, it just captures that divergence perfectly. You see, Bloom Energy made a smart pivot to provide power directly to all these new AI data centers, and it has been a grand slam for them. They're sitting on a $6 billion backlog. Meanwhile, the irony is just staggering. At the exact same time, Plug Power, desperate for cash, was forced to sell off its own land to a data center developer. So all of this brings us to this timeline. 2026 is, without a doubt, a make or break year. It's a high-stakes race against the clock. You've got deadlines for lawsuits. You've got the first crucial earnings report under the new CEO. You've got the absolute deadline to get cash from that land sale. And then the ultimate goal, hit break even by the end of the year. Every single one of these is a do or die hurdle. And it really just boils down to this. Owning this stock right now is like buying a very high-risk lottery ticket. If, and it's a big if, they can successfully execute their plan and hit that break-even target, the payoff could be absolutely enormous as all those bankruptcy fears just evaporate. But if they fail, well, there's not much of a safety net to catch the stock on the way down. Which leaves us with this final burning question. After so many years of trying, Plug Power has finally proven it can build a profitable engine. The tech works, the business model at its core is finally sound, but with its financial lifeline cut and its cash reserves draining away, will it completely run out of fuel before it can finally reach the finish line? The answer to that question is going to define the entire future of this company.